All right, we're going to do a recap for the month of February on how Bitcoin performed. We're going to take a look at some technical analysis, news in events that drove price action, and we'll have a little recap and what you can expect leading into March as well. To kick it off, February was very volatile and interesting. We'll take a look at let's look at the charts and we'll jump right in, right? All right, take a look at this. So we came into the month of February right around here. All right, so we were right around 100 and what do we got? 102, 105, 102. And we dropped all the way below 79. Okay, so that's a 17% drop in price just in the month of February. Now, it's not unheard of in a bull market. I think that caught a lot of people off guard, and here's why. If we take a look at the historical performance of February, you see a lot of green, okay? A lot of it. And if we go all the way back and we look in the Bitcoin halving cycles in those months, we can see here we had, a 37% increase in 2021. 2017, we had a 23%. And if we go back to 2013, we're looking at 61%. So typically in the post-halving year has been rather good. And if you look at this, just in general, February is typically a good month for Bitcoin. However, with 17% drop in price, that is the second worst. It really, other than 2014. So the worst in recent history. And if you actually take a look at it, it's not just surprising on that, but the relative strength of February is strong. Look at this. We've got two. Now this goes up until 2024 because we've got the full year there. But actually, this one isn't fully up to date. It's not the full 2024 year. But you get the gist. 2 red months, right? And we have to go all the way over to October before we see another just 2 red months out of all of them. So usually a pretty strong month. Now, on the flip side, as the economy, if you look at the economy as a whole, typically doesn't perform very well in the month of February in an election year. Well, I should say when there's a new incumbent, because we just don't know. There's the change of guard and all that stuff, right? That happened in January, so February is the first full month. And so there's always a lot of just unknowns, right? And so that's going to drive some weakness in the overall stock market. And I guess Bitcoin had some played into that a little bit. All right. On top of that, what we'll take a look at is, so it was down, right? So some of the news driving this, you can see these big moves down were Trump's announcements about the tariffs, right? The kind of the surprise announcements about, I shouldn't say surprise, but it caught a few people off guard, caught the market a little off guard on going back to the 25% tariffs for Canada and Mexico. That's what drove this price down dramatically. Now, we did have a nice comeback there. However, I'm going to caveat that because that was in March. All right, so we'll get into that later. We're just looking at the month of February. The other thing that was causing some weakness in the market is that inflation is still relatively higher than people want it to be. And the interest rates continue to be high as well, right? So, and CPI also came in hotter. So all of those macro levers were working against the price of Bitcoin. Another big news article, an event, and this actually showed the resilience of Bitcoin, is Bybit got hacked for $1.5 billion. Most of it was Ethereum, but it's crypto, right? Crypto got hacked. The biggest hack ever to happen. The largest theft in history following the money trail from Bybit hack. Now, here's the thing. The CEO very quickly shared the news, shared what they were doing to correct the situation, and I think handled it really well. The other thing is a huge hack like this, right? If we go back to Mt. Gox, now again, this is back in the day, totally different environment, right? Totally different environment. But that dramatic, it is a huge drawdown in the Bitcoin price. In this situation, Bitcoin stayed pretty resilient throughout that happening. And now there was these drawdowns, but that was primarily due to, I believe, um, the hack was, what was it, around this time of the month here, and it stayed relatively stable. The other thing that was interesting about this month is just how flat we were from February. There's the 20th to the 5th. So we had just 2 weeks of just chopping around here between what 98 and 96. It was just boring, right? Well, it became unboring pretty quick right here. But through this situation, Bitcoin did pretty good. So that shows some resilience in the marketplace, right? Which I see as a positive. Now, let's take a look at some of the technical analysis here. And another thing that showed the resilience of Bitcoin is if we look at the 50 and 200-day moving averages, either a golden cross or a death cross. And this is where it gets scary, right? And this is where we tested it and we came out strong. So I'm going to zoom in here. We're going to go ahead. We're going to take a look at this here. So you can see here we have this golden cross in, what was this, October, where the 200 day and the 50-day moving averages flop, which means it's a very good bullish sign. And as you can see here, what did the price do? We went from what, 70 something all the way up to 100, right? Now, what got interesting is we started to look. It's like, okay, if Bitcoin's price goes down and it drops below the 200-day moving average, we can get into a death cross, and that's showing that you might be moving into a bear market. But guess what? This is what was so cool to see, the resilience of Bitcoin. If you take a look at this, Bitcoin stayed above, these moving averages stayed above the 200-day moving average. That shows strength, right? It tested it. You need to test these things. It tested it and it stayed above it. That's a positive, okay? That shows resilience. Now, there's always gonna be talks of people saying, hey, is Bitcoin dead? Blah, blah, blah. Are we done with this bull cycle? Well, here, let's take a look, okay? I really like the Pi cycle top indicator. Again, this plays into moving averages, and when we get a cross between the 350-day and the 111-day, or 350-day times 2. So it's really when the short-term and long-term price action switch. What does that mean? Well, what you can see here is the pink needs to go below the teal, and that's when we start to look at being in a bear market. Guess what? That means the top is in. We're not close to that. Okay, I mean, there's still plenty of room here. That's positive. That means we still got runway in this cycle. All right, let's go to the MERV score. When we start getting in this band here, okay, of red, that typically indicates we're getting towards the top of the cycle. Well, guess what? Whew, we're nowhere near it as well. We actually retreated a little bit, right? Just like the price. Of course it did. It feels bullish. It just does. And I'll get into some news what to keep an eye out for in March. We got to test these things. You got to see who the lettuce hands are. We got to get them out and get the diamond hands in. The more diamond hands there are, the faster this thing runs up because they're not selling. So I see this all as positive tests of the market and all natural. I had a few videos on the drawdowns, and anything 20 to 30% is very common in a bull market, and typically what follows that is a quick price action movement. Now, let's take a look at Bitcoin rainbow chart. I like this one because it kind of says, what kind of deal are we getting on the Bitcoin price? And right here, you can see, let me zoom this in a little bit more here. We're touching back down into this blue zone, which is an amazing time to buy. Okay, so this is prime time to be stacking. Because here, let's take a look here. When we're in blue, let's just make this relative to in the past. Let's go over here, right? So we're in blue here. I mean, if you're buying below this, the the 20s, the 30s, the 40s. I mean, you're doing great, right? So I think it's a good time to buy. I think the price is looking right. Again, this is educational. This isn't financial advice. But let's jump back to the charts here, okay? So what we have is, in this chart, we've got the Fibonacci sequence here, okay? We've got the high, and the low goes back, right? I'm not going to zoom out on that. Right here are the key levels, okay? So 86 is a key level. 79, it gets real interesting, and we tested it. Again, when you test these things, it shows the resilience of the marketplace. And guess what? It came down. It hit 79. There was a lot of probably limit orders placed by whales, by smart money, by people, diamond hands who've been in this game. They know that's a great deal, right? You can see it push the price back up. And now what we're going to be taking a look at is what are the ranges, okay? So we could have a retest into the 80s, into the lower 80s. I do believe. I believe that can absolutely happen. Now, here's the thing. If we retest, the key levels is we don't want to drop below the 79, because if we drop below 79, then the next level that we're going to retest is 71. That starts to get into some concerning areas, and I believe somewhere around in the 60s is when we could technically, 62 maybe, is when we could technically be back into a bear market. Don't quote me on that one. I could be off base there. Anyway, these are some interesting levels to retest. So let's take a look at kind of what to keep an eye out for going forward, and where I believe we're going. So right now we are, where are we at from a price? We're at what, 90? Right around 90,000. 88. We're right around 88. Okay. 88 is a crucial level right now. I see us, if we drop below 88, I could see it, and it's for a sustainable period of time, I could see us then retesting 79 again. Personally, I mean, a great buying opportunity is anything between 86 and 79. I mean, right now is not bad, but anything in this sweet spot here is I think you're going to be very happy between 86 and 79. Anything below 79, the risk-reward ratios change a little bit more, but I think this is, I mean, you're still above this 50% line, and if you're buying anywhere in that zone, I think you'll be pretty happy. Then what we're going to see is likely the other resistance levels right around 95, so I could see us chopping around between the 80, what do we got here? What is this one? 88 to 95. Once we get past that resistance level, then we see some relative strength. What we're going to run into, though, is 100,000 is still a huge psychological barrier. You see, we have been able to get above it, but it's just such a big round number. Whales have been in the game forever. We're going to have their limit orders placed there to sell. We're going to have to test that a few times. That's just my opinion. And there's actually some opinions out there that we could actually chop around between a much larger range of 70 to 120K for the next several months, maybe into mid to late summer, before we get these huge breakouts. I still believe that we are looking at, based on all this, I'm sticking with an October of 25 top of this bull cycle. I'm going to stick with the 265 price for this time. I don't see the technicals, in my opinion, changing dramatically where I'm going to back off that number. So I'm going to leave that for now. Looking into, let's do a quick recap for February, and then we're going to take a look at March. So ultimately, Bitcoin had a 17% drop. This is like 102 to 78. This is one of the largest drops and the worst February in recent history. A lot of this was driven by macroeconomic and political uncertainty with those tariffs that had been announced. There was some technical confirmation, which was really good. Testing that 79 was good. I see relative, although the price action isn't where people may not prefer it to be, I see all this as healthy. The size of the drawdown, and then these resistance levels that we tested, I see as all saying that this is healthy and part of the cycle. All right, looking into March. Okay, some things to keep an eye out for is tomorrow. There is the crypto conference or meeting, and Trump and a lot of the big names in the Bitcoin space and the crypto space are meeting. There's rumors that the Bitcoin strategic reserve could be announced at that point. I mean, here's my take on it is, and this is like the standalone Bitcoin strategic reserve. How do I say this? I'm under the mindset that, I mean, they've already said they're going to do this whole thing with XRP and Solana and all this other stuff, right? I see them as two separate buckets, right? You can have a Bitcoin only strategic reserve in one bucket, and then you can have your kind of shitcoin altcoins in a different bucket. It's you go to a restaurant and you're leaving the meal, and let's say you don't finish all your steak. You say, you know what? Can you put that in one box, right? And then you've got, I don't know, your soup or something. I don't know. You're not going to mix those two, right? You got this soup of shitcoins, and you're not going to say, hey, put it all together. Let's put it in one big thing. No. As long as I keep it separate, I don't really know where I'm going with this, but I see it playing out that even if they do make that announcement, it'll be this singular bucket that's there, and then there's a separate bucket. Fine, who cares? Like, as long as you don't mix and mingle, and if it's 80% Bitcoin, 20% of the altcoins, whatever. We'll find out. That's news that could move the market. Okay. When it comes to resistance levels, keep a close eye on 94, 95K. We need to hold those levels to regain that bullish momentum for the next upswing. Key support levels is that 80K mark, and really that 80K mark is huge. If we go below that, we can be some concerns. We could drop down to 70. And then the biggest things I think are probably going to be driving a lot of this coming up in the month of March is macroeconomic factors. When it comes to how does interest rates look? Is the Fed going to pivot? I don't know. If they do pivot and kind of ease up on that, or we start some quantitative easing, that's going to be extremely bullish. Don't know if it's going to happen in March, but those are things that are going to be triggers. And you also have some of those larger kind of global discussions around kind of the war and all that kind of stuff, Ukraine, Russia. That'll also kind of play into some of this as well. So the big thing is, although February was red, it was the worst February in recent history. I believe we tested some key resistance levels. It shows the resilience of Bitcoin. And I think we're still set up. Could we chop around for the next few months still, all through spring? Yeah, maybe. But I see a breakout to the upside happening. Maybe it's sooner, but at least the second half of this year could be extremely strong. So we're going to keep an eye on all those factors. And if you guys like this, we'll do a monthly update going forward. So like and subscribe below, and keep stacking those sats. Some good buying opportunities at some of these price points. So keep an eye on it. Thank you.